We'll kick off. Good afternoon, everyone. I'm Rowan Corley. I'm a project manager at the North East Automotive Alliance, and today we have a webinar on bank support. In this current period of time, it's more important than ever before to understand what your bank has to offer through the various government schemes that have been announced, such as the Coronavirus Business Interruption Loan Scheme, the Coronavirus Large Business Interruption Loan Scheme, and the COVID Corporate Financing Facility Scheme. So, thank you to both the British Business Bank and the Bank of England for supporting this event. I'm sure it'll be an informative session for myself and all the participants. If anyone does think of any questions throughout the webinar, please feel free to drop them in the Zoom chat, and we'll pick them up at the end of the Q&A section. Without further ado, I would like to pass over to Dawn Wu from the British Business Bank and Annalise Mersika from the Bank of England. Thank you.
Thank you. Just to introduce myself, my name is Sean Foy. I'm the Senior Manager for the UK network for the British Business Bank in the North East. And I've been in sort of business commercial banking for nearly 29 years. My primary role at the moment, I've been seconded into what we call the CBILS team, the Coronavirus Business Interruption Loan Scheme approvals team, where we're trying to accredit new lenders onto the scheme at the moment. So I haven't worn that hat for many years, but I'm effectively acting as a bit of an underwriter cum assessor on applications. I thought I'd escaped all that, but clearly not. So we're trying to help businesses and support them by getting more lenders onto the programme at the moment. We have around probably 50 odd lenders at the moment to put that in context, and we're trying to put more on. I don't know if I can control the slides here from here, or if Laura's doing it from her side. So if we could just move on to the next slide, I think. I'm just trying to see if she's got, yeah. So we'll have a little look at what CBILS is, some of the key features around it, some additional revised procedures, because since it was originally announced in the budget by the Chancellor in March, it's probably changed around 4 or 5 times. A little bit around the eligibility criteria. I'd highlight some new schemes, and I know Anna's going to pick up obviously the Bank of England scheme, but how that sort of our scheme dovetails in with that a little bit, and a bit of general lending guidance really, from what we see with businesses, because I've done a few talks like this and been approached by 1 or 2 businesses directly around what do the banks look for in terms of a lending request, and indeed in terms of a CBILS request. So we could just go on to the next slide if that's all right. Hopefully, yeah, here we are. So the Coronavirus Business Interruption Scheme launched in March. I think that the numbers they talk about 1,000. I think this morning I was on a call with our Chief Executive of the British Business Bank, Keith Morgan. I think he was highlighting something like 12 to 14,000 facilities have been processed. There's around 30,000 applications have gone into the banks on the schemes and the funders on the scheme. So that's just to sort of take away some of the noise that you hear around coronavirus. People hear quote, oh, there's 300,000 facility requests. They're not. There's been around 300,000 inquiries, but not all inquiries lead to an actual formal application to a funder. So the reality is it's nearer to around 30,000 applications that's gone in. So it's unprecedented numbers. To put that into context, I know, for example, that Lloyds in the first hour that they opened for the CBILS programme received 2,000 applications. You know, they wouldn't normally expect to see that probably in the course of a week, let alone a day, or within an hour. So huge volumes of requests going into funders, and probably a little bit of a plea from me: work with your funder, work with your bank. Accept the fact they won't respond straight away. They will do their best to get back to you, but a number of managers across all of the lenders who are involved in the scheme are working incredibly long hours. Quite often it's not uncommon for them to start at 6 in the morning and be working till 1, 2, 3 in the morning and getting a few hours sleep and then starting again. because they have huge volumes. I know of one particular manager who had 54 requests on his desk alone, and more were arriving each day. So bear with them. They are people too. Some of their families, will be self-isolating. They may have family members who are ill or unwell. They're working from home, often trying to look after children, just as we all are at the moment. So just bear that in mind when you're approaching them, and give them time to answer your request. Number of obviously changes have been announced to the scheme, and if you could go on to the next slide for me, I'll cover that off. That's great. So facilities wise, it's up to 5 million. So it's 1 to 5 million, £1,000 that is to 5 million. But a number of lenders have put in floors. So a lot of the major banks will start at £25,000. I think RBS, NatWest will look at £5,000. But if you were to go onto our website, we have some filters in there where you can filter by amount, you can filter by region, and you can filter by type of facility, because there's 4 different options under the CBILS programme. Revolving credit facilities, which is a posh phrase for an overdraft, really. There's invoice financing, and they're up for a maximum term of 3 years. There's asset finance and term loan, which is for a maximum of 6 years. In terms of the way that the facility works, there's an 80% guarantee in place, and I'll come back to that later on, because there were some enhancements that's been done around that. There's no guarantee fee to pay or interest to pay for the first 12 months. But just to understand that, you still have to make, if it was a term loan, you would still have to make the capital repayments, because I think that's caused a little bit of misunderstanding with certain SMEs. They assume that they don't have to pay anything for 12 months. Well, that's not correct. Interest and fees are covered that the lender would normally charge, and it's done under a thing called a BIP, or business interruption payment. As a borrower, you would be notified of what those fees and rates would normally be. You would be provided that letter either at the start or during the term of the facility. But at the end of the day, unless you ask for a capital repayment holiday, if it's a term loan facility that you get, or say asset finance facility at the outset, and unless your lender is prepared to do that because it's at their discretion, you would have to make repayments on the facility. And that's something that needs to be understood. Finance terms are up to 6 years. The interest rates are agreed with the lender. We have no influence over the rate that's charged. At the end of the day, we want them to be reasonable rates, and we've certainly asked the lenders to bear that in mind. But it's based on the risk and the pricing models that they use. But we have asked them to what we call do a through benefit of the effect of the CBILS guarantee. At the end of the day, the CBILS programme is a state aid programme done under a temporary framework with the European Union, and we want the state aid benefit to pass to the borrower, not to the lender. So we've asked them to reflect that. So it may well be, for example, a lender may be wanting to charge a higher rate to businesses if they were lending normally because of COVID-19, because they perceive the risk to be higher. CBILS is one way that they can A, continue to lend to that business, and B, potentially reduce the rate they would have charged because of COVID-19. And try and pass through a benefit ultimately to the borrower at the end of it. But the critical thing to bear in mind, it is debt, it is not a grant. And there were many cases of banks being reproached, assuming people were going to get a grant facility from the bank. We've had people come to us directly. We're the accrediting body for the scheme, and we administer and manage the scheme, but we do not lend directly to SMEs, and that needs to be clearly understood. The borrower remains 100% liable for the debt. So your business is 100% liable, and that needs to be clearly understood by the businesses at the outset. It's not free money, and please don't perceive it as such. Could I see the next slide, please? So the additional things that changed, initially businesses were, being asked to give guarantees because it was optional for the lender to take a guarantee or not. What we found is in most cases, certainly with the major high street banks, they always took the personal guarantee. Due to some revised changes that came out, under 250,000 personal guarantees are not to be taken. That means that your principal private residence, if you're borrowing less than 250 grand, is not at risk, and they can't take the principal private residence as any sort of security. Above 250, they would take security from the company, probably in the form of a debenture. They would also normally take a 20% guarantee to reflect the difference between 80 and 100%, personal guarantee from the principals of the business, typically the directors, and then you've got their 80% government guarantee that underpins it all. Unfortunately, if a business was to fail and goes into default and they had to claim under the security, they would go at the company security first. They would then look at the personal guarantee, and then they would look at the government guarantee last. What it has done is it's enabled to give wider access to SMEs. There were a lot of instances initially where a lot of businesses wanted to borrow less than 250 grand, and indeed a lot looking at less than £50,000 were uncomfortable about having to give a personal guarantee and were shying away from the programme. So it has enabled a lot more lending decisions to be worked through. Where a lender has taken a personal guarantee before these changes came in, they cannot rely on that guarantee where they are lending less than 250 grand. And where it is for a facility over 250 grand, they can only rely on it for 20% of the outstanding balance on the facility at any moment in time. And what we've asked them to do is, where they have lent to businesses that had available security and they said, you don't qualify for CBILS, we'll do you a conventional commercial loan, for example, under commercial terms. We've asked them to go back and retrospectively look at those and, where possible, make them CBILS facilities to reflect the new world we now live in since those changes were made. If you could go on to the next slide. So you need to be UK based, a turnover of no more than £45 million, and that's for businesses that have a group structure. That's the overall group structure of the business, and have a viable business proposition. And people say, well, what does that mean? There is effectively, they are looking at affordability, but they're looking from an affordability point of view before COVID-19 kicked in, because there is an understanding that a number of businesses have seen turnover collapse, or certainly seen turnover reduced dramatically. But I would encourage you, when you're going to the bank, to have a viable proposal where you can show them your, and I'll come to the slide in a minute, but you're giving them a snapshot of where the business was before, the impact of coronavirus and projections going forward for typically 12 months, to give a flavour of the issues you faced, but what are the things you've done to try and address that, job retention scheme, so on and so forth. You are self-certifying that your coronavirus impacted now, but you need to clearly articulate. So I would be inclined in a proposal to say, well, the impact of coronavirus is X. I've had to close the factory. I've had to furlough X numbers of workers, so on and so forth. Clearly give a picture to the bank and try and make it as easy as possible for the bank to make its assessment and for the relationship manager to make that assessment. The worst thing, and I was a relationship manager for nearly 29 years in one guise or another, were businesses that gave me bits of information. So I'd want 3 years accounts and I'd get one, or I'd ask for the management figures, are they 3 months out of date? That's not a great deal of use to me as a relationship manager. I need the full picture of your business at that moment in time to try and give you the best possible chance to get the facility agreed. If I have to go backwards and forwards chasing, it's really difficult. And in these tough times, most managers don't have the time to chase a customer for information. You need to try and present as much as possible. They may have some queries, but try and give them all the information they need on day one. So yeah, if you just go on to the next slide, please. And just to sort of confirm, there are a number of other schemes that have been introduced, and I know Anna will talk about the Bank of England scheme, but there's a CBILS large programme that was introduced because a number of businesses, I think through people like the CBI and other bodies, expressed concerns that the Bank of England scheme helps in one space, but what about businesses that are above 45 million turnover, perhaps don't have an investment rating, where do they go? So a decision was made to introduce what they call CBILS, or CBILS Large as I like to call it. I just find that easier. Some of these mnemonics just start to get a bit confusing after a while. But essentially, we've got I think my washing machine's just going mad in the background as well. If you can hear any background noise, I apologise, because I'm working in my dining room and the washing machine's not a million miles away from where I am. Sounds like a jet fighter taking off at the moment. But certainly the scheme is designed for businesses over 45 million turnover. And if you're between 45 and 250 million turnover, then you can look at a loan facility or term facility of up to 25 million. If you're above 250 million, you can look for a facility of up to 50 million. We have already accredited a number of lenders onto that scheme, and you are looking at the major banks, so RBS Group, RBS NatWest, Lloyds, Barclays, HSBC, Santander, Yorkshire Clydesdale stroke Virgin, as they are now, and certainly Danske Bank, who operate in Northern Ireland and Belfast. They've also, to move on from CBILS, there's a new fund that was announced called the Future Fund. That was announced effectively sort of Friday into Monday, and that's to address a lot of sort of early stage businesses that operate particularly in that sort of tech and biosciences sector, where they are either pre-profit or loss-making, pre-revenue in some cases as well, perhaps developing a product, and where that business has raised £250,000 worth of equity in the last 5 years, whether that be from a VC or perhaps an angel investor. They can apply to the new Future Fund when it opens in May. I don't have any date of when it's actually going to open, and there's a facility will be in place to secure anywhere between, I think it's 125,000 up to £5 million. The scheme is designed really, it's effectively going to go in as a loan note, a form of debt which is convertible into equity at a later stage. It's a joint scheme between ourselves with £250 million of government cash and private investors. I don't know who those private investors and private funds will be at this point. There also is £750 million through Innovate UK, again to support businesses in that innovation and sort of tech space as well. We have some information on our website about Future Fund. There's also a link to the gov.uk website as well, and more information will be announced over the coming weeks. But I just wanted to highlight that because it was an area where businesses who were in that space who couldn't obtain a CBILS facility because they can't prove affordability. They are, by and large, many of them will be loss-making, and so therefore couldn't afford a conventional loan facility, are able to secure some funding. Critical thing to say about Future Fund is the funding can only be used for working capital. A business could not use it to pay off other debt. It must be used solely for working capital. And I'd now like to hand over to Anna to talk about the Bank of England scheme, the corporate financing scheme. Thank you. Thanks.
Thank you very much, Sean. Yeah, so I can cover off the COVID scheme. For background, I'm part of the COVID corporate finance facility scheme from the Bank of England. There's various parts of the Bank of England working on this. It's obviously the scheme launched quite early on, and there's a huge number of people kind of like contributing to it. My background has been I've worked for the Bank of England. Before that, I've worked at HM Treasury and generally worked on similar schemes during the crisis. So my background is more of a policy background. My aim today is to run you through some of the key facts of the scheme and maybe highlight key areas that we're seeing now in the applications process. And then I'll draw a few things on the eligibility criteria, and also point you to the website and what sort of like recent guidance we have published. So starting off, the key aim of the scheme here is to help non-financial firms that are facing temporary sort of disruptions from COVID, and it is primarily aimed to bridge liquidity cash flow needs. So in effect, it's similar to a similar function to an RCF. It's targeted at the larger firms, as Sean was saying. So it is targeted at firms that would typically be able to issue commercial paper, but you don't have to have issued commercial paper in the past to be able to access the scheme. And I will talk a bit about that later on as well. And it's, I guess the two top eligibility criteria are that a firm is a core contributor to the UK economy, and that the firm is has an investment grade rating or deemed to have an equivalent to an investment grade rating. And I'll also talk a bit about this because this is an area we get a lot of questions about. So the scheme opened on the 23rd of March. We've seen a huge volume of interest as well, smaller interest than what Sean was highlighting across the whole of the UK. And I guess that's the nature of the scheme targeting sort of the very big, the larger corporations here. But since the scheme has started, we have seen that up to last week, 7.5 billion have been drawn down from the scheme. And that was only a 3-week period. I'm not sure if other people have seen the interview that Andrew Bailey gave this week. The more recent figure is north of 10 billion for this week, and these figures will be published every Thursday afternoon. So tomorrow there'll be the latest data, which should show a figure that is higher than 10 billion. That's quite significant, considering that we estimate that the market before COVID for commercial paper was around 3 to 5 billion. So I think we can say we've doubled up what the market size would typically be. One area to factor in is that this has been drawn by about 35 large firms. But the scheme itself, in terms of the applications that we have processed, there's a further 21 billion that have been agreed from firms, and we're observing that they have not all the firms have drawn down from the facility. And I think that reflects the usage of the scheme as an RCF, where firms want the security to have the facility there and draw it as and when they need it. So in effect, there's potential for more to be drawn that we've already processed through the applications. There's also another about 100 more firms that have applied, and we've given them an in-principle eligibility acceptance. So that's also a large number of firms considering the population we're targeting. And I'll get on to what this in-principle means in terms of the application process, because it's important for firms to be aware how that process works. And finally, the last point I would like to make in terms of like the scheme usage is that around 85% of the firms that are deemed eligible did not have a commercial paper program in place. And this is the point what I made earlier, which is you don't need to have issued CP programs to be able to access the scheme, but you need to be of the size that is able to enter such programs, because these tend to be complicated programs. So that's the background in terms of where we are with the scheme. I'll move on to the application process. So in terms of the application process, so first of all, I would highlight to firms, there are 2 email addresses that we have published on our website, which I believe are on the slide as well. The first one is CCFF eligible issuers at bankofengland.co.uk. This is the email address that firms should be submitting queries about their eligibility. And we accept a light touch sort of query from firms to check if they would be eligible before they submit the full set of application and legal documentation. So please use that email address if you have questions about your own firm, whether you think you want to find out whether you're eligible or not in the first instance. There's then a second email address, which is the CCFF applications at bankofengland.co.uk. This is for formal applications to be submitted, and it will be primarily used by the firms to submit the full set of documentation, as well as the dealer bank that is setting up the CP program to submit their applications, potentially on behalf of the firm as well. So I just wanted to point these 2 email addresses, and they are on our website. So a couple of things to point out in terms of the application process. So one part of the process is where we do our eligibility check. And obviously the scheme is a joint Bank of England and Treasury scheme, but it is indemnified by the Treasury. So the risk assessment and the risk management framework covering the scheme is very much owned by the Treasury. So there is an element of discussion that happens between us and the Treasury to ensure that we are accepting the right firms that sit within that risk framework. That process is now bedded in and it's running quite smoothly. Most of the applications that do come through are being processed quite quickly. There's then a few cases that do take longer to finalize, and this is what I wanted to use the session for, is to highlight areas that can potentially run faster if people are made aware. So for example, most of the time, the reason why applications take a bit longer is because we need more information. I guess this is a similar point to that Sean was making, which is around what sort of information do you have and are you submitting it fully at the earliest possible stage that you can submit it. So 3 main areas I want to highlight is first, where firms do not have a clear-cut investment grade rating. I'll get onto that because that's a bit more complicated. So I'll get onto that in a minute. The second area is for firms that do not have a CP program in place. This could take some more time to set up because you need to reach out in the first instance to your commercial bank and make sure that the commercial bank is setting up the CP program on your behalf, that then the Bank of England can purchase the commercial paper from. UK Finance has a list of banks that are able to set up CP programs, and most of them are signed up to the scheme. So we encourage firms to engage with their banks earlier. To support companies, we have also stated, and it's also on our website, that we take the commercial paper documentation that has the standardized features, which is part of the ICMA programs. We also take simplified versions of those to make the process smoother for like new firms. So this information is on our website, and I believe the documentation is also on our website. So for firms who are interested in that, please do check out the website. And like I said, before you embark on the whole set of documentation filling and legal requirements, you can drop an email to the eligible emailing list and check whether the bank thinks you would be eligible or not, and give an indication. So that's one area. The second area is basically, once you've been given an in principle eligibility assessment, the firm then needs to go off and fill in all the various documentations, like I said. So there's a bunch of legal documents that needs to be submitted, which include, for example, the issuer confidentiality agreement, whether there are standard form guarantees or legal opinions that are required as additional, and all the sufficient information like whether they are investment grade or not. That can take time, and I think we do encourage firms to try and get on these documents as soon as possible after they've been given the very first kind of like indication of eligibility, because this is an area that can slow down the process. So I'll move on in terms of the criteria, and I'll talk a bit about the investment grade criteria. Basically, the Bank of England purchases commercial paper that is rated investment grade or equivalent. And the clearest way to demonstrate that is to have a rating from the major rating agencies, which are Standard & Poor's, Moody's, Fitch, and the rating agency called DBRS Morningstar as well. We're accepting short-term ratings or long-term ratings. But we know some firms do not have a rating, and that's where we've given a couple of areas of guidance of how firms can get around this. The first one is that we are accepting banks' internal ratings for corporates. And this helps us to assess whether a corporate would be rated investment grade equivalent or not. The way we do this is at the request of the Treasury, the Credit Benchmarks Credit Assessment have provided us with a file that gives like a consolidated version of the credit ratings, the internal ratings that commercial banks have. So from there, we are able to see what sort of ratings firms are given, basically, the large corporates are given by these banks. And typically, we will typically accept a firm that has an average of the bottom investment grade rating and none below. So that would be the 3 BBB minus ratings at a minimum. We understand that not all corporates might have this specifically. So we've provided more guidance on the website this week. And we're also accepting for firms with speculative grade ratings, which are below IG, we are upping one notch higher, but taking the average rating instead of the minimum requirement. So that would be an average of BBB ratings. We also are aware that some firms don't have many banks that rate them, so they might have only 2 banks that have a rating on them. For these cases, we've again notched up the rating criteria. So we would expect them to have 2 minimum ratings of BBB+ or above. All this information is on our website again. So with these firms, sometimes like the credit benchmarks data might not give like the complete information. So we might also be asking firms to ask their own commercial bank to give confirmation of what they think that the firm's internal rating is. So as a firm, you could go to your commercial bank as well and ask them to issue a letter that clarifies what their view of your rating is. We would not want the firm to attest that they have sought this information from all their principal lenders, basically to make sure that there isn't, that the information that we are being given is complete and gives the full picture. Similar arguments to what Sean was saying, which is we need to understand the firm's credit risk assessment very well. Having said that, there's a second route that firms can still go and get a credit rating from the rating agencies if they don't have one. So the CB benchmarks approach is not the only approach. If you don't already have a ratings agency, you're still able to go to one of the rating agencies and actually get a rating. And you can make clear to the rating agencies that your objective here is to apply to the CCFF, so that they can kind of try and fast track that as much as possible. So that is the overall guidance that I wanted to give today. The other thing I wanted to highlight is that we do update our website quite regularly. The scheme itself is kept under review on an ongoing basis between us and the Treasury, and we have been updating the website quite regularly with new information. So just to give an example, a couple of weeks ago, we've updated clarifications around how public bodies would be able to apply for the scheme and in what situations they can apply. We've also published information about the limits and the pricing of the scheme. So you can see from our website that for different ratings, what sort of indicative loans they would be able to get and what the pricing would be. In terms of the credit limits or the loans they would get, I emphasize that that is indicative because there's an assessment that is done around what does the rating say and what sort of revenue streams do firms get. And the limits will be dependent on those 2 factors, not just what the website says. If firms do want to have higher limits than what they've been given, this is a discussion that will be taken forward between the bank and the firm and the Treasury. They might expect some conditions attached to that, but we're encouraging firms that when they apply, they actually set out the actual loan that they need and give as much information around that as possible. So yeah, I think I'll stop there and take any questions that you might have. So can I just pass on to Laura and Rohan?
Thanks,
Yeah.
Anna.
Cool. Go on, Laura. Sorry.
Just anyone who's got any questions, unmute yourself and ask away, or alternatively type them into chat, whichever you prefer.
Hi, it's Given from the North East Automotive Alliance. I've got a question. Assuming everybody's got the documentation that you require, what's the turnaround for loans? What's the target turnaround in terms of days that you have for these loans?
Was that for the Bank of England or for CBILS?
For both. In other words, if everybody's got all the information that you require, what's the sort of target turnaround for the loans in general, for all types of loans?
I'll kick off and then pass on to Sean.
Yeah, sure.
So that's a good caveat. If everyone has all the information they require, they have a CP program in place, they have everything in place, they're just, a very swift application and it's ready to go. I can't give you an exact set of dates because it depends on the whole set of applications that are being processed, but that should be pretty swift if that's the case. And I would anticipate that will come in within, I don't know, 1 week, maximum 2 weeks.
Oh,
The
excellent.
reality is that there's the legal documentation that needs to be done. The firm needs to establish whether they are investment grade and submit the evidence around that. And most firms, like I said in the earlier stats, need to set up a CP program. And those are the things that could take longer, depending on how many of those issues you're kind of like trying to get together. It does depend on that. But I know that the banks are working really hard to make the CP program really fast. The documentation, like I said, we've standardized this to make it as smooth as possible, and we've also given shorter versions of it to make that as smooth as possible. So yeah, there's a lot of
Thank you, Anna.
So yeah, just to pick up on that point, it's really difficult for me to say how long it will take a bank to process an application. I can't say it's X number of days or Y. There is, they will have their own SLAs that they will adhere to. But what you probably need to understand is they've got massive volumes of applications. So, for example, I spoke to a Lloyd's manager, and one day he'd had 4 requests land on his desk on Monday. He'd already worked through something like 25 requests. So it's very much dependent on, if you're going to a particular manager in a particular bank, where they stand at that moment in time. They are working as quickly as possible, but I can't say it'll be 3 days, 4 days, a week. It's very much dependent. Certainly the initial stuff that we saw it was not uncommon for somebody to wait 5 or 6 days for the bank to come back to them. And they weren't being difficult, it's just they've just got unprecedented levels of applications. For example, most of the major banks now, particularly the high street lenders, are not looking at any new business stuff. They are only helping existing customers. So anybody who worked on new business, was a business development manager of some sort, they are all working with existing clients. Every bit of resource that they can throw at it, they are throwing at it to try and help businesses. But we're seeing unprecedented levels of requests.
Yeah.
I know of one lender that had the equivalent of 3 months application in 3 hours.
Dear me.
So, they are doing their best. Just bear with them.
Yeah.
And don't, if they don't get back in 2 or 3 days, don't be harassing them, because they've also got to sort, and I'm going to make a point here, they've got to sort the wheat from the chaff.
Yes.
There's a lot of incidences of, and I know this from talking to a number of lenders, where a business has not been COVID-19 impacted. They have a loan with a lender where they're on the hook for a personal guarantee, or they don't like the rate and they're trying to get a CBILS loan because they can get out with that guarantee.
Right.
That's not what it's designed for.
Yeah.
But they've still got to, as a courtesy, speak to that client, try and talk to them. They can't, but it distracts them from helping the businesses that really do need help.
Yes.
I think where we do see a bottleneck is, and this was something our Chief Executive, Keith Morgan, was talking about this morning, the lower level requests where somebody's probably wanting to borrow less than 25 grand. Some of the lenders have got floors at 25 grand. They won't look at something beneath 25. RBS, I think, will look at 5. And a lot of the smaller lenders will look at smaller requests. But those businesses, by and large, are probably have never borrowed before, to self-fund or bootstrap. They probably don't have a relationship manager. That turnover is probably less than $1 million, probably certainly less than $500,000. And they've dealt with an 0845 number, or they just have an app on their phone, and they're quite happy. They didn't need a relationship manager, and they've never thought they were going to have to borrow. And then suddenly they're having to approach a bank for funding. And that's where there's a real bottleneck of applications. And the bank knows very little about them, other than what they've gleaned from what they call the Know Your Customer procedures when the account was originally opened, however many years ago that would be. So that they're really having to sort of pedal fast to try and understand that business and try and help them. So that's the challenge. And I've just realised I missed one of my slides out. I'm having a day today because my headset's failed as well. So I'm not having a good day. But essentially, you know, if you go into the bank, it's your 3 years accounts to give them a snapshot of the performance of the business, management accounts up to date, and projections, typically 12 months and a cash flow. But make sure that you've done all you can in terms of, you know, if you're furloughing staff, that you've got that in place, and you've applied now as available through the HMRC website job retention scheme. If you can negotiate a rent reduction with your landlord, that you've done that you've deferred the VAT if you want to do that, and you know, you've engaged with HMRC over that and cancelled the direct debit, and that you've done all you possibly can, and evidence that in the projections when you go to the bank. I spoke to one business last week that was closed and he was still advertising on Google. He didn't need to, but he hadn't thought about cancelling the advertising. There's little point advertising if you're not open. It's stuff like that. Some insurance companies are offering reductions in insurance premiums, you know, and some businesses pay quite a lot in terms of indemnity cover and other costs. If they offer you it, snap their hand off. You know, it helps with everything that helps with cash flow. It's not about being profitable. It's about cash. Cash is always king. Yeah, that's the reality of the situation at the moment. So the more you can do in that space, the better, to be honest. Yeah. And I'm sorry that's a bit of a long-winded answer.
Thanks, Sean.
No worries.
We've had another question come in. And, Sean, do you have any idea yet in terms of how many applications have been received, and in particular regional figures or even County Durham?
How many applications have been? Sorry, I missed that bit.
How many applications have been received?
Been approved. I understand there's something like 14,000 applications being processed. Wow. UK Finance do release figures. Typically, I think it's every Wednesday stroke into Thursday in terms of applications. I believe they are looking at a regional picture, but I have no visibility of that at the moment, to be honest. I think, as you might appreciate, that data has to be gathered from the lenders who are on the CBILS programme. And at the same time, you know, there will be some businesses that secure funding that are not through CBILS. You know, they may well get another facility of some sort, which is not uncommon. You know, that's still happening. So there's that to be taken account of as well. So I can't give a definitive answer, but certainly UK Finance do announce the overall UK figures typically on a Thursday. I understand. Yeah.
Great, thanks. We've also had a question for what do companies do in terms of those with obviously no yearly or less than 3 yearly accounts?
I think all you can do in that instance is give them all the information you have. So if your business has only been established a couple of years or a year, 18 months, try and give them you know, the audit accounts if you've got them, if not management figures. I would always get those double checked by your accountant if they're management figures, just to make sure, particularly if you're inputting that information yourselves, that you've not made any errors or mistakes. I spoke to a business last week and she was trying to do her own cash flow, and I said, realistically, do you feel comfortable doing the cash flow? And she said she didn't. She wasn't sure what to put in and what to leave out. And I said, well, have you spoken to your advisors? Have you spoken to your accountants? And she said no. And I know the firm, they're a very, very good firm. And I said, you need to talk to them and see if they can overview what you're doing. The worst thing you can do is present something to the bank that portrays a false picture of the business, possibly to your detriment. I know of at least one business that's done precisely that, and the bank's got the wrong end of the stick in terms of the actual profitability of the business. He'd effectively suggested he was loss-making, and he's not. But that's because he tried to do the figures himself, and has come unstuck, unfortunately. And he's now trying to repair that position. Hope that answers the question. Any others?
Hi, it's
Hi,
Paul
can I
Butley
ask
here.
this question of Sean, please?
Yep, certainly.
Sean, it's Ian Howard from Department for International Trade here. When you talked earlier about the new future, I didn't grasp what you were saying about the private lending that needs to go into that. Is that private lender does that need to be identified by the company that's seeking the loan?
Is that the future
or is that
fund?
something that the
Yeah.
bank will identify?
Yeah, so the line's breaking up a bit, but you said the future fund, yeah?
Yes.
I don't know at this stage who those private investors or private funders will be. That will come out. There'll be further announcements on the future fund in the coming days. So I can't really give an answer on that one at this point. So I think it's just watch this space and watch the our website and the government the gov.uk website as well, if that's okay.
Yep, that's fine.
No problem.
Thanks.
I think there was another question as well. I think somebody else.
It is, yeah. It's Paul Butley here, North East Automotive Alliance. Just obviously getting access to cash for a lot of SMEs is a matter of life and death at the moment. If a company was trying to access the CBILS loan specifically to cover off the job retention scheme if they've got furloughed employees, which is a rebate scheme, is there not a mechanism to try and link up tie that loan, the CBILS loan, to the job retention scheme repayment? Because
there's no mechanism. I think what you can do is allude to the fact that you're applying for working capital, essentially to pay wages, and that you've applied to the job retention scheme.
But the restriction there is obviously it's still at risk to a bank, whereas if and therefore the bank will be asking for to go through that detailed process you've already talked about. But if there was a mechanism to tie the two together, it would speed up the process, which would cut down on the backlog, but also get cash out to SMEs in a timely manner.
I'm happy to feed that back, but certainly at the moment, as we stand, there is no mechanism in place. But I can certainly feed that back to the bank centrally and to our government affairs department that liaise with BAYS and with Treasury. So certainly happy to do that.
Okay, thanks.
Have we got any final questions, or is that a wrap?
A quick question from Caroline Taucus at Business Durham, and it may be one of those anecdotal ones rather than fact, but anyway, I was talking to a colleague in DIT this morning who said a small business that was predominantly 80% export had been turned down for a CBILS loan. Through my quick reading of the guidance, I didn't read anything that said, you know, if the majority of your business was export, that you would be looked on less favourably.
Yeah, I'll take that one if that's all right. Yes, it's an interesting point, that I have had contact with a major lender, I can't say who, where that exactly had happened to a business, where 80% of their business was export and 20% was sold in the UK. Exporters are not specifically excluded from CBILS, but they can only use the facility for working capital, i.e. to pay wages of staff that may have been furloughed. What they cannot use the CBILS scheme for is specifically for an export project, i.e. I was talking to a lender about this earlier on, that has quite a significant book that exports, of their clients that export. You cannot use the scheme to sort a specific export project. So if, for example, if you wanted to send 1 million widgets to Hong Kong, and you need to fund that, you can't use CBILS to fund that. Equally, you couldn't use it for some sort of export drive or new marketing campaign to promote a product overseas that you're trying to sell into a new market, or a new country. and that's where the export point comes in. And that's what you have to bear in mind with CBILS and with any of these programs. CBILS is done under a temporary framework with the EU, and that is a specific rule in there that's been in place with the EU. So we can't, we can't do anything about that. What they could do is apply, and I don't know how they've approached their lender. If they've gone and said we want it for export, then they're going to get a no, as this particular client of a large bank had received. If they've gone along and said we needed to pay for wages in the staff in the UK, and we've applied for the retention scheme, and the amount is this, then that could have been a different conversation. But obviously, I don't know what they said to the lender. Okay,
thanks. As you say, it probably comes down to presentation in the end.
It does, and it's how they've approached it. Whether or not there is most major banks and funders will allow a right of appeal. So certainly, and that would typically be looked at as a contact of mine was saying by in the bank with a black horse. It's always a second pair of eyes that will look it over and make sure that the decision was a correct decision in that instance. So it's perhaps worth them going back to their lender and their relationship manager to see if anything at all can be done. Okay.
Great. I think that's it. Thanks very much,
no problem.
Sean and Anna. That's really been really useful. Thank you for your time. And if anybody's got any further questions that they think of following this, then please just fire them through to us, and we can send them out.
I'll pop over some. I'll drop an email over to you, Laura, with some links to our website for the CBILS scheme and the other programs I've mentioned. And I'll put my contact details on there. So if people do want to come to me and ask me a question, I'm happy to do so. Bear with me though. I'm working quite long hours as well, trying to credit lenders at the moment. But I'll try my best. Okay. All right. Take care now. Thank you.
Thank you.
Thanks. Bye now. Bye.
Thanks. Thank you.
Bye.